Welcome to AML classes. What is escrow account? An escrow account, in the context of anti-money laundering, AML, refers to a specific type of account used to hold funds or assets during a financial transaction. It is designed to ensure compliance with AML regulations and mitigate the risk of money laundering or other illicit activities. In an escrow arrangement, a third-party intermediary, known as the escrow agent, holds the funds or assets on behalf of the transacting parties. This agent is typically a trusted financial institution or law firm. The funds or assets are held in the escrow account until certain predetermined conditions are met or until the transaction is completed. In the context of AML, an escrow account may be used to mitigate the risk of money laundering by providing an additional layer of scrutiny and oversight. By involving a reputable third party as the escrow agent, the transaction is subject to their due diligence and compliance procedures, which aim to detect and prevent money laundering activities. The escrow agent is responsible for verifying the identities of the parties involved in the transaction, conducting appropriate customer due diligence, and monitoring the transaction for any suspicious activity. They are required to comply with AML laws and regulations, including the reporting of any suspicious transactions to the relevant authorities. Here's an example to illustrate. Let's say you are interested in buying a house, and you have found a seller who agrees to sell the property to you. To ensure a secure and fair transaction, both parties agree to use an escrow account. Initial agreement. You and the seller agree on the terms of the sale, including the purchase price, conditions, and timelines. Opening the escrow account. You and the seller choose a trusted escrow agent, typically a title company or an attorney. You deposit the agreed upon purchase price into the escrow account held by the escrow agent. Fulfilling conditions. The escrow agent holds the funds securely while both parties work to fulfill the agreed conditions. For example, you may need to arrange financing, conduct a home inspection, or obtain certain permits. Completing the transaction. Once all the conditions are met, the escrow agent verifies that the requirements have been fulfilled. This may include verifying the clear title, confirming the completion of repairs, or obtaining necessary approvals. If everything is in order, the escrow agent releases the funds from the escrow account to the seller, and the property is transferred to you. Contingencies. In case any issues arise during the process that cannot be resolved, the funds held in the escrow account can be returned to you, and the transaction is cancelled. By using an escrow account, this example ensures that your funds are held securely and are not directly transferred to the seller until all the conditions are met. It provides protection for both parties involved in the transaction, reduces the risk of fraud or misappropriation of funds, and adds transparency and accountability to the process. It's worth noting that escrow accounts can be used in various other transactions, such as mergers and acquisitions, business sales, or large-scale commercial transactions, where funds need to be held securely until certain conditions are satisfied. By utilizing an escrow account, regulators and law enforcement agencies can have greater visibility into high-value transactions, ensuring transparency and reducing the potential for money laundering or other financial crimes. Thanks for watching.